Crypto, what is it good for? Should you own some? Should you avoid it altogether? Or should you wait a few years to see what happens in the space? Bitcoin has surprised everyone again, surging more than 60% since the beginning of the year. This reminds us that Bitcoin was, is, and will likely remain volatile for some time. But you cannot ignore it, since so much of the world's financial future is being built around blockchain technologies that are decentralized and censorship resistant. And what these exactly mean, these terms, we're going to get into in a minute. Some astonishing use cases for cryptos and blockchain technologies are being developed. For example, you can now load your health data onto the blockchain so that you don't have to fill out forms every time you visit a doctor or a hospital. That's just one side of it. Decentralized finance is another, and that's the buying and selling of assets without an intermediary. You can make loans, you can extend loans, you can earn interest. But you may be surprised to learn that ordinary businesses are finding some incredible use cases for crypto, buying US dollar-backed stablecoins as a way to hedge themselves against local currency weakness. Well, we're going to look into this, and we're joined today by Omer Iqbal, who is CEO of FiveWest, to discuss this in more detail. Welcome, Omer.
Thank you. Happy to be on. Good to
let me just give you a little bit of a bio as to who you are. Omer has a degree in financial management from the University of Johannesburg. He's got a degree in finance from the University of Stellenbosch. That's 2 degrees so far, right?
Yeah.
His entire working career has been spent in the financial industry. He previously worked at Invictus Capital, Fedgroup, and Nolands, which is an auditing firm. So you're an auditor?
Yeah, I used to be one.
Trained auditor?
No, not really.
Okay.
I was trying to become one, but then I've found that I loved investments way more.
How did you get into cryptos?
So my first experience was obviously investing myself for years and years and just studying the markets and stuff. But then after that, Invictus Capital was a good way to get a grip of the market, and I learned a lot from my years of working there. So I think it was a good learning curve and a good way to enter crypto.
How did you enter crypto? Did you buy some Bitcoin?
I bought some Bitcoin back in the day.
Okay. How far back was that?
2014.
2014.
Yeah.
Good price.
Yeah,
do you remember how much you paid?
Can't remember really, but it was cheap.
A few thousand
rand.
Wow.
Yeah.
You still got them?
No.
No? You sold them?
Spent both of them.
Okay. All right, so let's talk about crypto adoption. I mean, the stats for this are kind of all over the place, right? Some figures suggesting there's about 300 million people around the world who own or have owned crypto at some time or another. I think the problem it still has, a lot of people can't stomach the volatility. We've seen since 2021, the drop was about 70%, then it's up 60%. Yeah. So what's your advice to people?
Look, well, no advice, but the way I view it is essentially crypto should be viewed as a long-term bet, if I may say, because in the short term, it's more dependent on what the retail market thinks about it. And the retail market is usually, it's filled with fear, I'd say, in most times. So if there's any bad news or any negative news in the market, the price drops, everyone tries to sell their coins, and then at the end of the day, it's not really a real feel of what the market's trying to do. It's just the retail clients that are trying to just offload everything, and that's why you see these 60-70% drops and 60-70% volatility, if I may say. But I think it needs to be viewed more as a long-term bet and a diversification tool. So it's like the same as you investing in stocks over the years. So it needs to be viewed as a long-term asset and an asset class and a financial product. So I know SARS or South Africa recently included it as a financial product. So it needs to be viewed as that, and you need to actually leave it for a few years and then see where it takes you. Because anything like with short-term investing, you can have highs and you can have lows. So I think that brings increased volatility. But when you talk about institutions, they actually hold the product for a long period of time. So the price drops and the price increases doesn't really affect them because they're holding on and selling in, let's say, in the year 2030, when the price is a lot higher, as been predicted by a lot of different players in the market, that it is going to be mass adoption in the market. And that's when you'll see the real bull run happening, and that's when you want to offload it.
Yeah, it is pretty surprising. I mean, that Bitcoin since the beginning of this year is up 60%. And that, of course, has got something to do with loss of faith in the banking system. But what do you see now? There has been a drop, by the way, in recent days, partly because there's a legal suit in the United States against Binance.
Yes.
But what is your take on this? It's very odd to my way of thinking, that Bitcoin would rally on a crisis in the banking sector.
Yeah, look, I think it's more people losing faith in the banking system. So recently I was reading an article which said that the people are wanting to stop deposits into smaller banks in the US. And with the regulators just increasing rates all the time, I think it gives a lot of people hope that crypto is actually going to be the future currency of the world, and that's how it's going to go. So I think if the US keeps raising their rates and people are losing faith in the banking system with the whole Silvergate Bank, Silicon Valley Bank, all going down overnight. And then a lot more banks that are being affected, the smaller banks, because people are losing faith in it. So where do you keep your money? So you're not going to withdraw all of it and keep it under your pillow. So people want to now find a diversification tool, which is now cryptos. And I think that's where the stable coins comes into play, because you essentially are controlling, you're the owner of your own money, you're controlling your own money, so you're custodying your own money, and I think that's a huge thing. So you're not putting all your faith or all your eggs in one basket and giving it to a bank to custody. Now you can custody it yourself on a ledger or on a hot wallet, as we may say. So I think that's where the world's trying to shift to, especially with the huge banking crisis that we have on hand. I think crypto adoption and more realistically, I think stablecoin adoption is going to increase over the few coming years now.
All right, so that was my next question, is about stablecoins, because that is the real use case that has grown. It's Bitcoin and it's stablecoins.
Yeah.
That's the two stories.
Correct.
And stablecoins, of the top 20 by market cap, measured by market cap, the top 5 biggest are stablecoins.
Yeah.
So that would be your Tether, that would be your USDC, it would be Binance USD, and there's a couple of others in there.
Yeah.
But what is happening? Why is this now? Let's just define, first of all, what a stablecoin is.
So a stablecoin, if you really think about what a stablecoin is, it's like fiat money, because it's backed one-to-one with fiat currency. So at the end of the day, principle would be 1 USDT or 1 USDC is equal to $1, because essentially there are bank deposits that match the stablecoin. So any amount of stablecoin that are minted needs to be in principle based on how much deposits you made into a bank account. So it's just a way, it's just like you have 10 Rand in your wallet, you hold, let's say, 10 RUSDC, or I don't know how to say it, but $10 in your wallet.
And of course, there's a Rand stablecoin, or there's a few of them.
Yeah.
And there's a Euro stablecoin, and there's many different stablecoins.
Correct, yeah, but it should be matched one-to-one with the bank deposits. So you need to, so that's what a stablecoin is. It's just essentially you holding money in a bank account, but now you're holding money in a wallet. So it's a different way of just having where your money is.
Right. Now, of course, the interesting thing about a dollar-backed stablecoin is that it can be traded and spent completely outside the banking system.
Correct, yeah.
It needs, there's no regulator can stop it. So you can have a stable coin, you can convert some of your profits from Bitcoin into a stable coin, and then you can spend that. So I want you to talk a little bit about the use cases that you've come across, or that you've developed actually at FiveWest for US dollar-backed stable coins.
So if you really think about it, there's a few ways to look at this. So when stablecoins first gained popularity, it was people trading, let's say, Bitcoin, and they wanted an off-ramp. So usually it was US dollars, then they'd withdraw it, money goes into your bank account, and then you can spend it. And then let's say people didn't want to hold their money on exchanges, so they'd have to withdraw it. Then you'd have to redeposit into the exchange for you to buy more Bitcoin if you were playing the price, etc. So it was just a quick off-ramp for people. So, okay, go into Bitcoin, I want to sell it into USDT, and then your USDT is sitting there in a wallet. Transactions are quick, so you can withdraw it, you can self-custody your funds, and then now your money's back on an exchange if you want to buy the next day. With traditional banking, it wasn't possible because there were lots of time delays, etc., which would affect the price. So if I want to, let's say, go withdraw my money now, and I want to reinvest tomorrow, there's sometimes the SWIFT system has delays. So it can take 3 to 5 days for you to get your money onto an exchange, in which case you've lost that entire margin or the time it takes you to get the deposit on. You're now sitting there with a huge price risk, because now you wanted to buy it, let's say, 20,000, but now the price is at 22,000. So you've actually essentially lost out on that $2,000 gain. So that's where it gained its popularity, I'd say. But I think the use cases would be for you to be able to spend your crypto. So you could have, let's say, merchants in South Africa accepting crypto. So it would be another way of you it's like a crypto payment gateway. So it's like a payment gateway like your instant TFT, like your credit card, where you just swipe your QR code, or it gives you a QR code. You send your tokens, and then you buy something on, let's say, Takealot. So that would be a great use case because then everything's recorded. The customer's recorded on Takealot side as to who's buying it. You KYC the customer yourself, and then that's how the customer can now spend their crypto easily. And it works out really well. So when Bitcoin pumped 20% over the last few weeks, people wanted to offload that into and actually buy products with it. So I think Pick n Pay has done a great job. It's a fit in the market for people who want to spend their crypto. But I think a large number of retailers are going to start using it across South Africa, and I think across the world, really. There are a few companies doing it already. I know a company based in Singapore, AAA. They've tested this model and it's working wonders. So I think that's a good use case of people to be able to offload their crypto at any given point in time and still being able to spend it to buy whatever they want to, so laptop or computer screen.
Let's just break this down into practical steps here. So there's somebody, let's say, who's got some Bitcoin sitting on Luno.
Yeah.
It's sitting in a wallet there, wants to buy something on Takealot. What do?
So it'll be the same way. So you'd have to check out. So now you get a few options: instant EFT, direct, whatever, cash on delivery, credit card, and then the fourth option would be pay with crypto. So then you go click that, it'll develop a QR code for you, and a wallet address. So if you don't have Luno on your phone, you can copy the wallet address, put it into Luno, and then the withdrawal happens. Then once that happens, you'd hedge the crypto. So as FiveWest, our crypto payment gateway, would hedge the crypto out into rands. So Takealot gets the exact same value that they would have using instant EFT, just with less fees. So the fees will be about 0.5% compared to instant EFT, which is a lot higher, and credit cards, which is even higher than the instant EFT option. So firstly, the merchant saving on costs, and essentially they're getting exactly the same end value as they would have using any other method. And then this is all recorded on both our side and Takealot side, so it's important to know who the client was who was spending their crypto. So it's not circumventing exchange controls. It's actually essentially still being recorded. It just gives you a quicker way to spend your crypto because you want to take advantage of the price when it's a lot higher.
And your payment gateway is called what?
Blockshop.
Blockshop.
Yeah.
Blockshop.
Yeah. Correct, yeah. So that's just our testing method now. And we now want to start going into merchants and start integrating that into a few retailers, and then want to give it a good go, because I think it's a good method. It's a good way to actually spend your crypto, and it's a good way for you to be able to spend it when the price is high. Because usually what happens is, again, I was talking about the banking system. You sell it, takes time for you to withdraw the money, and then you resend it to let's say Takealot. But in that time, there's a lot of time lag. And sometimes what we see, and if you do some research, it's a lot of impulse buying that happens at night, right? So if the price is up, I come home from work, I want to be able to spend my crypto straight away. If I see something, I want to buy that TV there, I want to be able to buy it right now and then. And in 2 days' time, I'm over it. So it helps with the merchants actually getting more sales, and also helps me taking advantage of the price. So it's actually a win-win.
So my question is, if I wanted to buy something on Takealot and my crypto was sitting on Luno, do I need Blockshop to do that, or can I do it directly with?
So you can do it directly. Blockshop is just for us. We just have a testing model there just to test the system out. But we want to be able to integrate exactly how an instant EFT company would integrate onto Takealot. We want to be able to integrate with all the merchants and just have it as a payment method. And then it develops or generates a QR code, which is obviously generated on our back end. And then the client can just interact directly with the merchant side itself.
So what are the advantages of dealing it through you rather than going direct to Takealot?
Because Takealot, so then they'd have to sit on the crypto, so they're then vulnerable to the price movement. Whereas with us, we'd hedge it out and pay Takealot, let's say 1,000 Rand, we'd pay them out 1,000 Rand, take the client crypto, convert it, and then resell it at using our OTC desk or using local exchanges.
Okay, just a couple of house notes here. The full agenda and speaker list, they're available on the Moneyweb website. And you can also view all of these presentations today on the Moneyweb YouTube channel. You got any questions, send them to events@moneyweb.coza. That's events@moneyweb.coza. Okay, so I want to talk now about another aspect of stable currencies which has been in the news quite a bit recently, and that is the collateral side of things. So you're saying that these stable coins like USDC and USDT are backed one-to-one with dollars. Yeah. Now, there's been a lot of press, and there's actually been some regulatory pressure for these companies that issue these stable coins like Circle to prove it. I think Circle is probably one of the most transparent. I think Tether there's been some questions about its transparency.
Correct, yeah.
In the last couple of weeks, we've seen a depegging. In fact, USDC went down to 80 cents to the US dollar, and a lot of people saw that as a trade. So they were buying effectively $1 at 80 cents to the dollar. Great trade.
Yeah.
It very quickly corrected over the weekend. But so talk about that and the danger of this, because we saw last year Terra Luna, which was an algorithmic, a different breed of animal altogether. That was an algorithmic stable coin that collapsed completely. Yeah. So people might be suspicious that this is going to happen again.
Yeah, so firstly, there's a massive difference between algorithmic stablecoins and currency-backed stablecoins. So I think that's what's important to understand. I've never been a fan of algorithmic stablecoins myself because it's like a game. So it's easily manipulated. The guys who are in control of it can manipulate that the way they want it to go. And I think that's the major problem with an algorithmic stablecoin. So when I say stablecoins, I mean more a stablecoin that's been backed by reserves. And I think Circle, like you said, is one of the best in the industry when it comes to that. But also, if you really think about it, the 80 cents to $1 thing you were talking about, that was sparked by them not having 5% reserve, or 5% of their reserves were in SVB, which is
Silicon Valley Bank. Yeah.
Mm-hmm. So when that happened, if you think about it,
and that was frozen.
And that was frozen. So essentially, at the end of the day, a 20% discount was a great buy because they only lost 5% of their reserves. So if I was thinking correctly, it would have to either stabilize to at least 95% for it to make sense, right? Because how can you make sense of a 20% drop when only 5% of your funds are being seized? Oh, not seized, sorry, frozen.
Yeah.
So at the end of the day, that was a good buy, and it was sparked by the retail market, I'd say, because it was over the weekend. So it was fear in the market, and people thought that's going to be a same Terra Luna situation where overnight they're going to lose all their value, and now they're going to be sitting with a massive issue, not having their funds. But also, I'd say that sparked kind of the bull run as well, because people had to now go into Bitcoin, into Ethereum, and to other altcoins. But I think most of the major market liquidity sits on Bitcoin and swaps between USDC and USDT. Because if you saw, USDT went up to 1.03 it was, and USDC was trading quite low at that time. So it was just the retail market, and I think it was it was a lot of fear in the market. I think also the fact that institutions were not open over the weekend. They were keeping an eye on it, but they weren't open. But I think any fund manager or any manager sitting with a lot of funds in USDC would have known that there's just retail market movement. And if you're getting a 20% discount, it's a good opportunity for you to buy. Because 80 cents to the dollar, why wouldn't you want to buy a dollar at 80 cents? I think that makes perfect sense. Even when it happened on Monday, I think it was already starting to correct itself. And I think it's pretty much back to parity now.
It's back to parity, yeah. Yeah, great trade. You know, you could buy a dollar for 80 cents, and you could cash it in, selling into Tether for 103.
Look, it's like a black swan event.
Black swan event, yeah. Okay, let's just talk a little bit about CBDCs, central bank digital currencies. That's all the talk around the world at the moment. There have been some that have been introduced. China introduced its CBDC, I think around the time of the Olympics. Was that 2020? That happened.
I think it was 2020.
Complete failure. Yeah. Nigeria introduced its e-Naira last year, at the same time as restricting your ability to withdraw funds from the ATM. They nearly had riots and revolutions going on there. A complete failure. CBDCs, what's your view? Good thing or bad thing?
So look, there's two ways to look at it. So crypto and blockchain was developed to be a more decentralized way of transacting. Another financial infrastructure was going to be built around this. But if you give all the control back to governments, like you just mentioned, you couldn't withdraw more than X amount on Naira a day. So you're giving the control back to the governments itself, who've been completely ruining how financial infrastructure is working. I'm not saying every government has, but mostly you can just go print money like the US is doing. You can raise interest rates, and you can do what you want to do. So at the end of the day, having a centralized currency will follow the same exact steps that we've been doing over the years. So it defeats the purpose of having a decentralized currency, in my opinion. But it could be a good way if you're actually giving it or handing it over to the consumers itself, and they actually create utility and show you how to spend it. So that's why USDC and USDT is a good use case for them, because no government or no centralized institution is actually in control of it. The guys who are in control of it are the minters, and then it's the spenders or it's the users that they have. So at the end of the day, if implemented correctly, it could be a great way to do trades between countries. So Africa could actually work. But at the end of the day, if the government is controlling it, who's to say that we're not going to be sitting in the same boat 5 years down the line? Because like what Nigeria did, and it sparked huge crisis in that country, was how can you restrict me from withdrawing my own money from an ATM? I should have full right to my money at the end of the day. And who's the government to tell me how much I can spend in a given day? If I wanted to go buy a car, I can't do it now. So why must I have spending limits on what I can spend in a day? It doesn't make sense.
Yeah, I mean, I think a good example of the average Nigerian's attitude towards their local currency is seen in the Bitcoin market, where you have a premium. If you want to buy Bitcoin in Nigeria, people will pay a 30% premium.
Yeah, close
to acquire
to
Bitcoin that you're going to get for 30% less here.
Yeah, no, so that's exactly it. So they've lost complete faith in their banking system. And what Nigerians are really irritated with the fact that obviously the Naira is losing value every day. So they're sitting there with a currency that is completely depreciating at the end of the day. And it's worth less. So I want to go buy a can of Coke, but tomorrow I'm paying double the money I was paying the day before. So I think that's a huge concern. Also, the lack of US dollars in Nigeria is another reason that premium exists. I think that's a huge problem in the market currently, especially in Africa, where financial infrastructure isn't as strong. So even South Africa, we've got a good financial infrastructure. But in other African countries, we really don't. And I think the lack of US dollars also has a huge part to play when it comes to the price of Bitcoin and other cryptocurrencies such as stable coins actually being close to 45% it is today. That's insanity. So you're pretty much paying a 45% arb. Great trade if you're on the other side of it.
Okay, so you probably have to define what an arb is, arbitrage.
Yeah, so arbitrage is when you're paying the price. So you're buying, let's say, Bitcoin overseas, you're sending out of a bank. So you're sending $1 out of a bank and buying, let's say, one Bitcoin for argument's sake, but you're selling it for 1.05 in South Africa. You're creating a loop structure, and then you're using in South Africa what we call a single discretionary allowance of R1 million, and then a further FIA, which is a foreign investment allowance of a further 10 million rand. So the government allows you to send this money offshore. In South Africa, I'm talking. So you're actually creating a loop structure where you can earn returns in rands at the end of the day, just exploiting the arbitrage that exists between the Bitcoin premium, Bitcoin price overseas and with the Bitcoin premium by selling it here locally. So that's the arbitrage. But if you, let's say, a European client who wants to send money into Nigeria, and you can just do it by USDC, you're quickly making 45% on the trade, and now your expenses are lowered by 45% because you've essentially done the whole arb loop, and you can now spend the money into it, which is also really bad for the economy if you think about it, because people now want to transact in crypto rather than actually do a trusted currency, or not trusted currency anymore, but rather using the bank system where you'd actually create more US dollars at the end of the day. So now we're losing out on US dollars, and people are finding ways to get their money to where they want it to be, either selling it into the economy for a lot higher or taking it out of the economy for a lot higher gain.
Right, we're going to come back to the arbitrage in a minute. If you've got questions, send them, type them in on the YouTube chat box, or send them by email to events@moneyweb.coza. Question here from John. How do you think the current collapse in the banking system will affect Bitcoin or other cryptos in the short-term future?
Well, we've already seen it, right? The banking system collapsed recently, and the price of Bitcoin was shooting up. And I think it also depends not only on the banking system itself, but it also depends on the Feds itself. So if they keep raising interest rates, then we're going to see an absolute moon for Bitcoin, because it actually, at the end of the day, people are losing complete trust and faith in the banking system. And also smaller banks, like I mentioned before, if you're losing complete faith, you don't want to deposit money into a bank, you're rather sitting in stable coins, and then you're kind of playing the Bitcoin market and the crypto market. So I think with the banking system failure, I think more people are going to start getting into crypto, and you'll see mass adoption at the end of the day. I think that's where the market's going. So if it keeps going like this, I think mass adoption over the next few years, especially with the Bitcoin halving coming up in 2024, I think it'll be a good way. So if the governments don't fix the acts to control the banks itself, I think we'll see a lot more people there, because they'll, in my opinion,
just explain what the halving is.
So Bitcoin halving every year. So Bitcoin, there's only
every 4 years.
Every 4 years. So there's only a limited number of Bitcoins at the end of the day. I think it's 21 million in total. Yeah, 21 million in total. So with that halving, what we've experienced in the past is just price rises, because there's less amount of Bitcoin that is now left for to be minted, if I may say.
So it reduces the rate of issuance of
That's
Bitcoin
correct, yeah.
By half.
By half, yeah. So at the end of the day, soon not enough Bitcoin being minted, or not enough Bitcoin there in the market, so now that causes, it's the same as gold. where there's something that there's a limited amount of supply for it, the price actually shoots up for you to be able to, because it becomes a commodity.
Right. Yeah, okay, so the other thing to bear in mind, I think, about stable coins and the fact that you might have your coins residing on a wallet. Now, you mentioned earlier things like Ledger. Ledger is a hardware wallet.
Yeah.
You have hot wallets. Hot wallet is something that's connected to the internet. Not a good idea. You really want a cold wallet that is disconnected from the internet. But there are these wallets that do exist. If you have your stable coins in a wallet, are you not effectively your own bank?
You are your own bank because you're self-custodying your funds at the end of the day. So if we have to think about it, if I'm sitting on $1 million in my cold wallet, in my ledger, I'm the custodian of those funds now. So with a bank, you're in no control. So as we saw with SVB and what happened to Circle's funds, 5% of their assets were sitting on the bank itself. And a lot of people actually had their money in a bank, whereas if they were with stable coins, you're your own custodian, you can spend it when you want to, and that's how you end up spending it. So you're in control of your own money. So if you lose the wallet and you don't have your key phrase or the whatever 14 word, 20 word, a key phrase, you've lost your money. So at least it's in your own control. Because sometimes you can blame yourself for losing a wallet, but it was your own fault. But if someone else loses my money, I'm really pissed off at that person, right? At the end of the day, in which case it's a bank now. And a lot of people are losing faith. Like, people are stopping deposits in a US bank, and we thought it was a strong economy, strong banking system, and people are losing complete faith in the banking system. So it is time for people to self-custody their money at the end of the day.
Become your own bank, self-custody your own crypto, and hold some stable coins. Because, okay, now let's get into this. This is very interesting. This idea, you've been across Africa and you've been talking to companies that they all face the same problem. That you spoke about the Naira. The Malawian kwacha devalued by 26%. I think it was 26% last year. The Naira, probably something similar, right?
Yeah.
Now, you come up with a solution for that using stablecoins. Explain that.
Yeah, so what it is, it's more of a treasury management tool that we want to give to companies. So how it works is, to give you a bit of background, like I said before, Africa doesn't have enough US dollar reserves. So at the end of the day, a company like Emirates, who works in Nigeria, can't actually take their money out of the country because there's not enough US dollars. And that's actually a real example, because Emirates had to lower the number of flights that were going into Nigeria because they actually just couldn't take the money out at the end of the day. So that's harming the economy firstly. That's not building Africa. It's actually breaking Africa, because not a lot of European and American companies now want to invest in a country or in a continent that it lacks US dollar reserves, because at the end of the day, you can't take your profits back out. You've got to leave it in, and then once you leave it in, it's devaluing all the time. Like you mentioned, Malawi, Nigeria, and it's huge examples across Africa. If you take most of Ghana, it's devaluing. Our currencies are devaluing. So another good example would be, if I want to price my stock in at R1, and over the next week, so I've signed this agreement with my client, and now he needs to pay me R1, but it cost me 80 cents to actually build the product. So I've got that 20-cent margin there to play with. But if the currency devalues, let's say for Malawi's example, 26%, I've already lost 6% on the trade. So it doesn't make sense for me to be holding local currency when I can't hedge out into a US dollar, or into euros, or into GPB, wherever the firm's from. So it actually gives huge price risk to the company itself. So giving them an option to actually hedge themselves out in stable coins takes away that risk. So as soon as they price the client, they convert the money into a stable coin, hold it, and then when they want to pay out their staff members, pay for expenses, etc., now they can actually just use their US dollars or US stable coins and convert it back into the local currency on the given day when they want to make the payments, and they know exactly what's happened with their money. Because the trend we're following is African currencies actually devaluing daily, if you really think about it. I know in South Africa we've had a strong comeback from the 1840, 1850 mark recently, but it's just turned into a game, trading at 13 Rand last year, and now we're trading in the 18 levels. It's just a lot of movement in a currency which gives no faith to foreign investors.
So if you had done this, if you were a South African company, the Rand was at 13 to the dollar a year ago, if you'd shifted your reserves into a US dollar stablecoin,
Yeah.
you would have saved yourself something like 40%.
Exactly, yeah. So that's what a lot of companies are trying to do now is they're not trying to take the money offshore at the end of the day. So they're not trying to break the law and take the money offshore. All they're trying to do is hedge themselves against market movements. So this is already done using CFD platforms, right? So people go and they trade CFDs just to manage their risk.
Contracts for differences, which is a derivative instrument.
Yeah, correct. Right. So they're already doing it, but it's very expensive for them to do it, and they're not in custody of their own funds. There's a lot of manipulation that goes on in the back end when you're actually using it with these CFD providers. So and there's overnight funding. So if you hold the position out for, let's say, a month or two until that deal comes through, you're losing out so much on overnight funding. So with USDC, it's a quick transaction, quick to get the money back.
No holding, no overnight fees.
No overnight
CFDs,
fees.
I think, is about 6% per month.
Yeah.
Right.
So that's already, you've lost 6%. So at the end of the day, and then again, it brings me back to the point where you're self-custodying your own funds. So there's a lot of advantages for it, and that's what people in Africa and companies in Africa have started to see is a way of just actually hedging themselves against local market movement.
Right. I mean, just to come back to the CBDC thing, I wanted to bring to your attention, there was a number of companies have tried this. I mentioned China and I mentioned Nigeria, but Marshall Islands did one as well, and they built into the problem with the CBDC that a lot of people are pointing to is this programmable money. Now, Marshall Islands programmed into their CBDC, they have the US dollar, which they can also use as legal tender. It is a US protectorate. And they have this CBDC with 4% inflation programmed in. So it can never be expanded more than 4%. That's probably quite sensible to do that. But there's other problems with it, is that people are starting to see if you're issued a CBDC and you don't spend it in a certain time period, you can lose the money. So it's money with a limited shelf life. The other thing is it's programmable according to your compliance with various government laws. Not up to date with your taxes, you lose your CBDCs. You are voting for the wrong political party, you got the wrong skin color. You know, all of these things can disqualify you in a CBDC. What's your view on that?
Look, I think when it comes to inflation, I think it's a good way to do it, right? It's already programmed into it because there is inflation in the market. So it's already there in the banking system already. So if I have 100 Rand now and next year the inflation is 6%, I've already lost 6% of my value that I was holding in my bank account. So at the end of the day, that is a good way to do it. But like you said, it can be easily manipulated at the end of the day. And I think it's for them to define exactly what they can and cannot do before the token is issued. I think that would be a great way for people to be able to understand exactly what they can do and what they can't do with the token itself. Like you've mentioned, I think more to African or South African terms, the color of your skin or stuff like that. I think that, obviously, I don't think it comes into play when you're talking about CBDCs in general, but I think if you're not paying your taxes and if you're avoiding it, that's a good way for you to be getting your CBDCs taken away from you. But a good way would be for you to be issued CBDCs on a wallet that the government issues the person itself. So that would be a good way. It's also a good practice for anti-money laundering, I think, at the end of the day. So if you go to a shop and you want to swipe for something, you have that wallet address that you're going to be transacting with. And if you don't transact with that wallet, it brings up a red flag already. And if it's programmed right and if it's used in the right way, I think it could work. But what we've seen is if you give too much control, let's say to the Nigerian one, which is a complete failure, was the government trying to control everything and they were trying to control spending. And that's where it really fails, is because you're trying to control something that shouldn't be controlled by the government itself. It's with the consumer. So if you program inflation, you program not paying your tax and being taken out, or whatever tax you needed to pay being held back and you're not being allowed to spend it. I think that's a good way for the government and the local authorities to be able to have monitoring your systems and monitoring exactly what you're spending. And also tax avoidance is not a good thing because it doesn't help the economy grow at all. So those are good things. But if programmed right, I think it's a great idea. But if you're just going to be controlling it like you have been in the financial system, it just doesn't change anything.
So the stable coins are kind of they were built on the blockchain. The central banks later came up and said, oh, that's a great idea. We'll do the same thing. We'll call it a CBDC. Yeah. It's a digital currency. But with stable coins, you have, I wouldn't say it's exactly private money, but it's kind of quasi-private money. It's a facsimile of the dollar or the rand or whatever the currency is. But it does give you some sort of protection. If you're in a badly regulated or a badly governed part of the world, you can opt for a currency or stable coin that has a better jurisdiction. It's quite a fascinating idea.
It's a fascinating idea. Look, and again, it brings you back to you being in control of your own money. So I think that's the most important point, is the self-custody aspect of it. Because it's not only in badly run or badly regulated countries. Like you've seen in America now with the banking collapse, people are opting not to have their money in a bank. So what's their next best option if they don't want to hold cash, or if they don't want to buy stocks with it? They've got to keep it in something that's stable, which is nowadays it's cryptocurrencies. I know it fluctuates a bit, but that's also, it depends highly on the retail market and how they're viewing news and what comes out. It's more speculation that makes the price change. Also, people are usually trading between Bitcoin, which is the most liquid market, I'd say, in terms of stable coins. So as they get out of it, the more demand for people selling USDC and having USDC, the price might move, but it's small movements unless there's massive news in the market, like we saw with the USDC change recently. I think it's a great way to be in control of your own money. And then with black swan events, people want to be able to buy that quickly. So they're holding USDT, they want to go quickly swap into USDC for them to be able to earn a 20% ARB. And companies and institutions have been doing that for years. They've been finding ARB opportunities worldwide. And I think that's what actually helped correct the price on Monday after the weekend's drop, was institutions realized that this is a great ARB opportunity. They've made 20%. Good board figures at the end of the year, huge bonus payouts because now they've done a good ARB.
Right, ARB being arbitrage.
Yeah.
And that's on your Treasury solutions side of things. So people who, companies that are converting local currency into US dollar-backed stable coins, sometimes there's a 20% gain over the course of the year, or a saving.
Yeah, even hedge funds, if you think about it, right? They're sitting on US dollars at the end of the day. They see a 20% discount. Hedge funds wants to buy it. That's good performance numbers for them to be able to show their clientele or people who invested in their hedge fund good returns at the end of the day with a very simple trade.
Just on arbitrage, the crypto arbitrage has been quite a cottage industry in South Africa, where back in the day you would be buying Bitcoin overseas on an exchange like Kraken, and you would be bringing that Bitcoin back to South Africa, selling it on a local exchange. In those days, you would make a quick profit of 4, 6, 8, at times 24%. Great days.
Good old days.
Now, of course, it went down to virtually nothing. But something happened in the last few weeks, and this crypto arbitrage market has kind of bounced back to life. It's not back to the 4%, but it's back to 2.2%, something like that.
Yeah, look, I think that was hugely dependent on the banking crisis. So firstly, FTX affected. So giving you, let's go years back, there were only a few number of players that were doing it, right? So only, let's say, a handful of people who knew about crypto arbitrage and were exploiting the price premiums. That's why you went up anywhere between range from 10% to 24%. But the more people started knowing about it, the more supply of Bitcoin and the more supply of stablecoins was there in the market. So there wasn't enough demand, but there was huge amounts of supply. So obviously the price got squashed at the end of the day. But if you take recent, whatever happened with SVB, so I think whatever happened with Silvergate, I think that was a huge point of why the crypto premiums began to start widening again. It was because people from South Africa couldn't get their money offshore because there wasn't any bank that was accepted and then converted into crypto. And also there was a huge time delay. So I send my money today, but I'm only locking it out in 3 days' time when the funds get there. From a bank account, now you've got to move it to a crypto exchange. From there, you've got to buy a token, now sell it in South Africa. So that's not enough supply actually caused the gap to widen. And I think wasn't a bad thing for South African term, because now that at least the gap's there. But obviously, the more players there are in the market and the more people who want to do crypto arbitrage, the prices will just get squashed to a point where it was so bad. It was 0.2%, 0.1, sometimes even negative ARB.
Yeah, negative.
So miserable.
Yeah. And so FiveWest does crypto arbitrage. You do that for clients. And you've, the fact that, was it Silvergate Bank? Silvergate Bank, a lot of the companies were using, that was because Circle, which is the issue of USDC, demanded that you use that bank.
Correct.
that's gone out of business. You found a workaround.
Yeah, so what we're trying to do is, or what we've put into place is for us to be able to self-custody the funds itself, to have an offshore bank account where people send their money to be integrated with stablecoin issuers, just so that we're in complete control of the loop itself. So that was the huge factors that we learned from the likes of FTX, the failed exchange that went on, and the fact that Circle all of a sudden just halted third-party deposits or deposits into bank accounts because Silvergate went down. So at the end of the day, all your trust was in a third party. Whether it be a regulated entity, whether it being a bank itself, it can go down overnight, right? So what we're trying to do is really self-custody the funds ourselves as FiveWest, so we're in complete control of, let's say, your funds, so that there is peace of mind for the client when signing up, that the funds at all times stay within the ecosystem of FiveWest. And I think that's a very important point, is because we are the ones who are liable. And we are an FSP, so we are licensed for long and short-term deposits. So as a company, our view was to actually create a loop structure that stays within our ecosystem. And that's why we've been able to resume trading, is because the money is now in our custody. We can pay the clients out, and they've got peace of mind at the end of the day. With all the scams and with all the negative news around crypto, I think it's very important that clients have an element of trust with the company that they're working with.
Okay, 30 seconds. We're running out of time. How far away is South Africa from crypto regulations? Well, we do have crypto regulations, but they come into force. You're going to have to be licensed by the end of this year.
Yeah, so you do, and you had to submit a document by the 14th of Feb this year, so I know a lot of companies have done it. But I still think we are still a few good years away from having proper regulations in place. That's because I don't think we understand the industry that well yet as regulators. So I think we're a few good years away, but I think what would be really important is for the regulators to work with us, is to work with crypto companies and to actually understand the ecosystem and understand the real world features and the benefits and how it can be avoided from, let's say, anti-money laundering and stuff, and then you can actually place something. So I'd say a few good years away.
Right, okay, I very quickly want to skip through these slides, if we can just call up these slides, just so that people can get a sense of what it is that you do. I think rather than go into this in any detail, we have covered quite a lot of this ground already. So the kind of services that you offer, you're an OTC desk, over-the-counter desk. What does that mean?
So you can buy and sell cryptocurrencies using our OTC desk. So it would be the same for using Luno, but for high volume execution, and also for retail clients who don't quite understand how to use an exchange can now actually use our OTC services in order to buy and sell cryptocurrencies.
So for big volumes of crypto, big volumes of Bitcoin that you wouldn't necessarily get filled that easily on other exchanges. Okay, you have a payments gateway, and you have this Treasury solution where you can convert your cash from local currency into US dollar stable coins. Great idea. That's another thing that you provide.
Yes.
And what's the take-up been like?
It's been really good. So we're in chat with a lot of different merchants and a lot of different PSPs around South Africa as well, who want to take it to their clients that they're working with. So I think the take-up's been great. It's just about implementation and getting it integrated into the likes of Takealot, etc. now. So we've got our business development team working on that.
And you've got the payments gateway that you also have developed as well. So
yes, correct.
You're not really a crypto firm, although you're using all of these new technologies. You're more a fintech, although that's a lousy term.
Yeah, we are more of a blockchain, so we believe in the blockchain space, and we believe that it's got a lot of useful benefits for people. And we're kind of an integration between the traditional world of finance and the crypto world. So we essentially want to be in the middle. We still want to use the bank, still want to do our forex trading for our huge clients or our institutions, and want to be able to provide them with real-world solutions using blockchain.
We are going to leave it there. Omer Iqbal, CEO of FiveWest, thanks very much for joining us.
Yeah, thank you for having me on. It's been an absolute pleasure.